How's everybody doing? Okay, guys, so welcome to this weekly video. As usual, going to try and keep these short and sweet. Just a reminder, next Sunday will be the first Sunday of the month, so we're going to have the full session. So reminder, that's a live session where we go through all the pairs, or we got pretty much 1 hour's time and we can go through as much as we can. So 28th of April today, let's see what this week's got shaping up for us. So again, I'm not making any trade calls or recommendations. You and only you are responsible for the trades you may decide to take. And the fact you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the website. Okay, so let's get cracking. What do we got? First things first, I think what's interesting here is to keep an eye on similar patterns on the ES and the YM, so basically on the S&P and the Dow. And what's happening is that I think a lot of people were looking for these previous highs to hold here to have some kind of a perfect head and shoulders for a roll, but it looks like we're continuing the move higher and we want to take out those highs. So a lot of people will be talking about the 1600 psychological level now. What you want to watch going into the week is, as long as these previous resistance acts as support, so globally speaking, as long as we keep on getting daily closes above these 68s, I would be, I would say that we're on our way higher. The rotation is higher, and we're going to likely try to take out those previous highs. Now, as I said in the last update, you have to respect these lows. You have to respect the fact that the support is holding, and that every time the market's had a chance to sell off hard and to break key supports, it hasn't managed to do so, or when it has broken some intraday supports, we've seen buyers coming in. Okay, so even with the famous or infamous tweet that came out, we had a 10 handle move down, but still buyers coming in very aggressively. So you have to respect the fact that the buyers are still there. So for me, the outlook doesn't change. I'm not interested in buying highs at all. I'm looking for intraday shorting opportunities maybe, or some bigger swing shorts shaping up, but I still think we need to fail from a higher level. Okay, so keep that in mind. And you can see that effectively the same pattern is playing out on the YM, right? On the Dow. We made previous resistance, we broke above it, broke below, and then everybody was looking for it to act as resistance again for a move back down, but we're holding. So you still have to respect this hold. Keep an eye on how we behave around this level if we get closes above or below, but as long as we do not manage to close below this level, probably the path of least resistance will be to try and take a stab at the upside, and we probably need to fail from higher levels. Just quickly on DAX. I just wanted to mention DAX because DAX is a very interesting chart, and we discussed this quite a lot. I think we were a bit early calling for this to bottom very aggressively at these 7,500s, but the only thing I wanted to say here is just this is a really important level for DAX, and we talked about it on Twitter. So we came back down. This was not only a structural support we had on our chart, it was also coming into this channel bottom, and it was the 50 back of the most recent swing move up. Okay, so you really have to respect this kind of move. You see how we're basing here, and we're right back up, shooting higher. Now, what a lot of people were aggressively selling into this, and I got a lot of emails asking me about this, but you have to entertain the possibility that this is not coming back. Okay. What do I mean by this? Is the fact that this current swing long that's being triggered at 75.18 is looking for a move right back into the 8,000 level and a 123 extension target in the 8,300s. Okay, that's a massive move, but still. What the shorts we're looking at was this downside channel, which had been playing out quite nicely. But on the move back up, look at this. We break right through our pivotal level. We go into these highs and we just slightly base. We hold straight away and we move higher. We come back down into 773s. They catch a bid. Aggressively sells down. 773s catch a bid again. And we're right back into those 78.50s. Right holding right 78.40s. So this does, a lot of people are just waiting for it to come back. It may not come back. Okay, so as far as I'm concerned, now the channel is no more. And what I'll be looking at this week is, should we get any sell-off? And it looks like the market's trying to cap it here ahead of these 78.50s. We could easily see a move back down to these 773s, but unless we start getting daily closes below this level, and especially an acceleration back below the pivotal level we had at 76.90s, this will likely continue to trade with a bid tone. So I still think the path of least resistance is to take a stab to the upside. Don't forget we got the ECB on Thursday. And if we take out these 78.50s and challenge these 78.70s and get a daily close above there, then I'll be looking for us to continue to move up and to try and test those that 8,000 level. So broadly speaking, this is what you need to, what I'd be watching this week. But again, it's looking like it's holding a pretty good bid tone. Okay, so you don't want to be too stubborn when you're finding these very, very aggressive moves. And this is a massive move. This is a very, very big move that played out very, very quickly. So you have to respect that. Doesn't mean it can't fail, but you have to respect those moves. What do we got on gold? So gold, we discussed about how we were basing into this 200 moving average on the weekly, and the fact that we couldn't get a weekly close below 1400. And what we're going on about, we're saying you have to respect the buyers coming in here. You have to respect this. You have to respect the fact that even though you've had a massive move, whatever it was, 4 standard deviation move on the day, and these moves will rarely retrace straight away in a heartbeat, but also it's very unlikely or improbable that you continue to get such aggressive downside so quickly right after it's happened. Okay, so it's normal that the market will start to base, will go a bit sideways before choosing direction. But what we said, what was interesting is the fact that clearly the buyers were supporting this right at the 1400s and we couldn't get a close below. So we were looking for this to rotate back up into 1450s and a hold above 1450s back into the 1500 level. Okay, so going into the week, I'd be very, very cautious in terms of being very stubbornly short here, as long as we keep on holding above these 1450s, because as long as we hold above these 1450s, then I think the path of least resistance is going to be to try and take a stab at these 1500s, and then we'll probably have to deal with a new intra-week range, which will likely be this 1550, 1500, and 1450. Now, if we get going into the beginning of the week straight away, we're closing below these 1450s, then the range I'd be looking at, the trading range for the week, would be 1400, 1450, 1500. So it's really, this is really a pivotal level to give us some kind of a steer on the direction for what kind of range, what kind of trading range we've got this week. Okay. There we go. A lot of people have been asking about the JPY. So basically, I think most people who follow me, my opinion on this. But basically, what I'd be looking at, we had on USDJPY these 98.40s, which we called our pivotal level, or at least what we were looking for as a bull bear line. And it looks like these 100s are being defended, right? We've got these sellers coming in and oops, sorry, not what I wanted to do. Sellers coming in, defending these lower highs, unable to take out that 100 level. So right here, I think what we've got in the cards is, as long as we keep on closing on a daily basis below these 98.50s, I've got a 98.43 on my chart, I think we've got a chance to try and take a stab at those lows, 96.70s. Should we move right back above those 98.50s and hold above there, then I would not be surprised to see us move right back to test those highs. So I'm looking at this as a bull bear line and to give me a kind of bias for the day, and I'll be looking how we get on a daily basis, how we close around that 98.40s. Keep in mind that this should continue to trade with an underlying bid tone. Any kind of retracement is healthy, but it doesn't necessarily mean we're going back to 90. Okay, so don't forget, should we continue to accelerate lower, that these 96.20s are very, very, very important. Okay, and you'll see a very similar kind of action. Oh, by the way, there we go. 30.50s on euro. That's what we're looking at on Friday. What's going on Euro JPY? Similar thing. Here's our bull bear line on Euro JPY. We talked about it being the 128.00, so that's what I'd be looking at. Daily closes below the 28.00, then I think we've got a chance to see the market try to take a stab at these 126s. Do not underestimate the importance of this support. And if we go back up above 128s, then I think we'll keep on trying to test the upside. Now, what's clearer here than on USDJPY is this whole series, and that's what I was talking about on Twitter. It's all about the defense of those highs and basically see if the market keeps on selling into this descending trend line. That will be a focus, but you know, bull bear line 128 going in on the week. Okay, so CAD, and then we'll do USDJPY. CAD's just because the chart I've been talking about a lot, and basically whether you want to say we've been a bit stubborn on this or not, but basically we're still looking for a price to rotate back down into the parity mark. And basically now that we talked about, we had two big levels we were talking about, the 102.70s, then we had the 101.50s, okay? And these were the two levels we kept on discussing, and this is what the kind of pivotal areas for the sideways chop in these highs. But once we came back in here, all we kept on saying is watch these 0270s daily close above below. As long as we can't get a daily close above this level, we're looking at this swing high to be protected, and we expect us to go right back down and test the 0150s, and we expect the swing short for a move to the parity still being in play. Okay, call this a complex top building here. So now as we've held this and we're breaking back down going into the week, what you want to look at is these 10150s. Bull bear line for daily close above or below. Bears need to keep on getting closes below this level to try and get some more traction to the downside and try and take a stab at the 0060s. That's what I'll be looking at. But again, this will be my guiding line for the week. But for the questions, the guys who wrote to me, my outlook is still same. As long as we don't get daily closes above the 0270s, I'm still looking for this to come back down, potentially move back into the parity and into this 200-day. I think there's another video when we talked about a bit more detail on it, which should be one of the past weeks. So euro and cable, what's going on euro and cable? Let's do cable first. Cable, just a reminder, well, we had a beautiful hold of these 152s, real failure to trigger any move below, no matter what the market threw at it, downgrades, non-downgrades, good news, bad news, we still had the buyers coming in and holding, unable to get any kind of traction below the 152s, and we're still looking for it to go into 153s, which was our pivotal level for a move back up into the 155.70s, okay? Let's get back on the weekly chart. This chart everybody should be familiar with, at least the guys have been following me on Twitter and follow the blog. And what we were saying is, since we based down, we were looking for this move to rotate back into 155.70s, 155.80s, which is the 50 back of this move down. What we were looking for was this action around this 153, which was our bull bear line on this weekly, looking for the flows to come in around this area. And we had a lot of defense. We had a lot of wheeling and dealing around here. But once we started to close above, then it was giving us even more confidence that we were in this rotation. And once we closed above, this was signaling more confidence that the rotation into 155s was in play. And as long as any dip below here kept holding above these 152.00s, that if you go back on the 4-hour, you can see how important that level was, then we were game on for this move back down. So globally speaking, my outlook hasn't changed. I'm still looking for 155s to get tested. If 155s break, I'd expect to see a move into 155.70s, 155.80s come relatively quickly. To the upside, because this is a weekly outlook, the levels I'd be looking at is 55.80s and then 57.60s. Keep in mind, now that we've retraced, a lot of shorts will be looking to try and press this and come back in. They've had a bit of trouble shorting it around the 53s, so probably cover their shorts and looking to reshort higher. So I would not be surprised to see shorts coming in at the beginning of the week trying to front run the 155 level. As far as I'm concerned, as long as we don't get a weekly close below the 153s, I'm still looking for this to rotate higher. I'm still looking for it to move into the broader range to the upside, which is this 157.60s to 155.80s. Okay, this is going to be a massive level, very, very important level, because this is what's going to likely dictate whether we are going to, the market is going to continue this aggressive move down for a break back down into 144s and 142s. You've probably heard a lot of people talk about those levels. That's likely what they're looking at, but they need the market to hold below this broader resistance zone, which we're looking for price to move back into this week. Okay, well, of course, what the bulls want to see it break outside of that range very quickly and hold above. Something that you can maybe use, get on a daily chart, 200-day moving average. You see that's coming in pretty much 157.60s. As long as we close below there, the bears are going to keep on hitting this. If we start to close above, then it's not going to be looking that pretty for the swing shorts. Okay. And last but not least, what's going on Euro USD. So yeah, Euro's been struggling. Don't forget ECB on Thursday. This is likely going to decide this. And what's happening here? Well, we were looking for this move back up into 130.50s, and we got that. And there's a big fight. Okay, so what I'd like to stress is that, as I've been saying, don't get confused with velocity of the move inside the broader range. What is the broader range we've been talking about? The broader range is 131.20s into these 131.80s. So this is the resistance. Okay, and then the support is 130 into 129.50. Okay, what does that mean? That means that the moves inside, as far as we're concerned, the moves inside this range, no matter how quickly or how violent they are not that important unless we get a daily close outside of this range. Okay, before it was the 130s, but we've got a lot of choppy, so we just widened this out a bit. So unless we get a daily close below these 129.50s or a daily close above these 131.80s, you can call it 132s, it's really much to do about nothing. And status quo. And what is the status quo? The status quo is that the bears are looking at this move, broadly speaking, highs to lows, front running this 50 back level. That's why we had that burgundy line on that. We expected the shorts to front run this, not wait for the 50 back to come in and cap it at this resistance. The shorts are trying to cap this, and they're looking for a move lower, and they're looking for this to continue and break below these 126s and continue this downtrend. And what the bulls are looking at, the hold of this most recent move from highs to low, this double bottom pointing at double bottom base, move back up, the hold of the retracement at the 50 back, looking for a move back into 133s, and if they could get some Momo all the way back into those recent highs. Okay, so that's what's playing out here. Also, don't forget, this is the short-term action. In terms of broader, oops, that's not what I meant to do. Broader perspective, we're holding this bigger 50 back, and we've talked about this. You can go back in the recordings, which is looking for targets in the 141s. Okay, so that's the big fight that's going on, but it'll likely have to be decided around this range, and most likely we'll have to wait for the ECB to see a sustained break outside. So again, don't get confused with the velocity inside this range. Wait to see a daily close outside it. At the moment, the way this is trading, I wouldn't be surprised to see us move back up into 131.20s pre-ECB. Let's see what happens, okay? So don't forget, next Sunday we've got a full 1 hour session, free webinar on Sunday. We'll review any pair under the sun or anything anybody wants to look at as long as we have time. If you enjoyed the content, don't be shy about sharing it or retweeting or whatever. That's always very much appreciated. Have a great Sunday. Thanks for listening, and I'll see you guys for London Open tomorrow. Take care, bye.